all the distinct gentlemen sitting on the dais, and all the distinguished media personalities from various media houses. IREDA, as you know, is the full form Indian Renewable Energy Development Agency. From the name itself, the mandate of the company becomes clear. It's India's largest pure green play financing NBFC with more than 36 years of history. It's 100% owned by Government of India with comprehensive range of financial products for the renewable energy sector, and it's categorized as systematically important NBFC in the infrastructure financing category. IREDA has been among the first financial institutions in the country to raise global funds for climate financing from various domestic and multilateral institutions. It enjoys the highest credit rating of AAA stable from various credit rating agencies, to name a few: ICRA, India Ratings, Equity. IREDA has presence across all the renewable energy sectors, including the traditional renewable energy technologies like you have solar, wind, small hydro, biomass, cogeneration, transmission, etc., as well as in the emerging renewable energy technologies, which we know that battery storage, if we talk about battery storage, EV, including charging infrastructure, green hydrogen, your fuel cells, and all related renewable energy, whatever comes under renewable energy segment. Coming to the performance of the company for the financial year FY23, IREDA had a gross loan book of about 47,000 crore. The CAGR growth between FY21 to 23 has been 30% for the company. The other parameters are also very healthy, like its NIM, which we call net interest margin. For the year 23, it was 3.32%. The return on equity was 15.44%, which is also quite healthy. And the same is complemented by the high quality of the loans with GNPA of 3.21% and net NPA of 1.66%. The capital adequacy ratio is 18.82%, which shows that the company is adequately capitalized as against the norm of 15%. And the most important part is that about 92% of the loans which the company has extended are fall under secured category. So unsecured loan form only a very small percent of about 8%. The credit cost, the gross NPA, average cost of borrowing of IREDA is lower than PFC and REC, which are the closest peers, for the last 3 years, resulting in superior financial performance in relative terms. The best-in-class performance of IREDA is backed by a comprehensive appraisal of loan proposals, efficient monitoring and recovery processes which the company follows. The company derives its competitive strength by virtue of its deep understanding of the renewable energy sector, which it has developed over the past several years. And geographically, IREDA has presence in all parts of the country. It has presence in the southern part, eastern part, northern part. It covers pan-India. IREDA is now coming out with an IPO with a price band of 30 to 32 rupees for a per share face value of 10 rupees. The total offer size is 2150 crore. This is at the upper end of the price band. This translates to 67.1 crore equity shares with face value of 10 rupees. With primary, it has two components: the primary offering as well as the OFS by Government of India. The 15% is a primary offering and 10% is OFS by Government of India. The primary offering amount is 1290 crore out of the total amount of 2150. So 1290 is the primary offering, which is 15% of the total offering, comprising of 40.3 crore shares, and OFS by Government of India, which is 10% of the total offer size, is comprising of 26.8 crore shares. the anchor bidding is slated on November 20th, and the issue will open on November 21, and it closes on November 23, that is next week only. Anchor offer size is 645 crore, and the company is getting a very strong response from various investors in the anchor book. That the company will be telling about all those things. This is all from my side. And now I would request the chairman of IREDA, Mr. P.K. Das, to address you. Yeah, thank you.